Hi guys, I hope everyone's been having a good day thus far. So today we have quite an exciting question from the NSC 22 accounting paper 1. It's a question on company financial statements, the statements of comprehensive income and the statements of financial position. We allocated 60 marks for this question and 45 minutes in which to do it. So without further ado, let's just dive right into the question. So the information relates to Lesano Limited for the financial year ended on 28th Feb 2022. So keep in mind this means our financial year starts on 1st March 2021. So they say refer to information B1 and calculate the cost of the stock that was damaged. So let's see what they say in B1. So they give us some information about the stock records. The business sells sports shirts. Then they tell us that the weighted average method is used to value these shirts. And below is a table of stock records. Then they say that damaged shirts were not included in the closing stock figure and that these shirts must be written off as a loss. Now there's two components to this calculation. We firstly need to calculate the number of shirts that were damaged, and then we need to calculate the unit cost per shirt, and that will be on the weighted average method as they've mentioned here. So during the year, I had 9,000 units available for sale, but then of those 9,000 units, I only sold 7,750, meaning that on hand I should have 1,250. But then in my closing stock figure, I've only got 1,185, and the difference between these figures will give us the number of shirts that are damaged, and this is equal to 65. So we've got one part of our calculation. And then remember, on the weighted average method, the formula is your total cost divided by your number of units. So if you look here on the table, they were quite kind. They did give us the total cost already calculated. So that is 6,579,000. And they also did give us the total units, which is 9,000. And if you put that on your calculator, you should get 47,515. So quite easy starts. Okay, so next they say refer to information B2, and then for 1.1.1, they say calculate the profit or loss on the sale of the delivery vehicle. And then they also want us to calculate the total depreciation for the year. So let's have a look at information 2. So they've given us a table of fixed assets here. Then they also tell us that vehicles are depreciated at 20% per year on the diminishing balance method. Equipment is depreciated at 15% per annum on the cost method. Then they also say that the bookkeeper calculated the total depreciation for the year and it came out to this figure, but this was before taking the information below into account. Okay, so for 1.2.1, an old delivery vehicle with a carrying value of 170,000 on 1st March was sold for 140,000 on 1st December. So remember, in order to calculate the profit or loss on the sale of the vehicle, we need to compare the book value slash the carrying value to the sale price. Now they've given us the carrying value here, it's 170,000, but this was on 1st March. So we also need to take into account the residual depreciation until the date of the sale. So vehicles are depreciated on the diminishing balance method. So remember your diminishing balance method, it's going to be your carrying value. So that's 170,000 times your rates of depreciation, which is 20%. And then it's 12 months have passed since 1st March. 9 months have passed since 1st March, so it's going to be times 9 over 12. And that is equal to 25,500. So in order to calculate our profit or loss on sale of vehicle, we need to take 170,000, which is our book value on 1st March, minus that 25,500 that we just calculated, and then minus the 140,000, And then that should give us a loss of 4,500. Okay, so the first few calculations was a nice warm up, but now we're getting into the business end of this question with question 1.3. And here they're asking us for 1.3.12 to complete the statement of comprehensive income, and that is 28 marks, and then just the equities and liabilities section of the statement of financial position, and it's quite a big 18 marks. So if you look here, they say, note that the amounts calculated above must be transferred to question 1.3.1, the statement of comprehensive income. So they were quite nice to let us know that here, but if not, remember that you do need to transfer those figures. So what I've done below is I have just transposed the figures that we calculated above, and then I've also brought in some of the amounts from the trial balances that are given in section A. And I do this just so that it's a systematic way of working. So that way I never really forget any of the figures, because then you're just throwing away free marks. So then let's move into the adjustments that we need to do. So they tell us in information 3 that 33,700 was received from a debtor whose account was previously written off as irrecoverable, but this was posted in error to the debtor's control account, and we need to correct that. So this is a situation we had. We had a debtor on book, and then we decided that there's probably no chance that he's going to pay his debt, so we're just going to write him off off our books. But then he has a change of heart. He comes back to us and says, "No, I'm gonna pay you the money that I owe you," and that was 33,700. But then what the accountant did was he wrote this off again from our debtors. So that means our current debtors is understated by this amount. And remember, when we receive income from debtors that were previously written off, these are your bad debts recovered. And this needs to go firstly in the income statement figures. So it's your bad debts covered. And this figure is 33,700. Then they also say that the provision for bad debts must be adjusted to 3% of the debtor's control balance. Now, if you look here, our debtors control balance is understated by that amount that we wrote off. So we need to add back that 33,700. And then when we do add it back and take 3% of that amount, we get 83,400. Now, remember, when we're making our provision for bad debts adjustment, we need to compare it to what we previously had. And as you can see here, it's 85,840. And the difference between that is 2,440. Now, since we are reducing our provision for bad debts, we need to hold less. Our provision for bad debts adjustment will be an income, and it needs to go in the income section. So provision for bad debts adjustments, and then this is just the figure of 2,440 that we just calculated. Okay, so then they say that the business signed a contract with Always Safe Securities regarding the premises, and then an annual premium of 32,400 for the period ended 31st July 2022 was paid in full on 1st August of 2021. Now this is your prepaid expense. And we prepaid by 5 months. So we need to take the 32,400 times 5/12. Now these 5 months represents the extra portion of the premium that goes into the next financial year. So these are the 5 months that were prepaid. And that will give us 13,500. Now remember, this prepaid expense doesn't fall off into this financial year, so we need to decrease our current year security expenses by that. So minus 13,500, and that should give us security expenses for this financial year of 59,000. Okay, then in information 5, all details in respect of the February 2022 salary of an employer were incorrectly debited to sundry expenses. The following information relates to his salary. Now, there's two adjustments we need to make here. Firstly, to the salaries and wages, and that includes your contributions. Okay, so they say that a tenant has been leasing the office space since March 2020. This tenant has paid rent until April 2022. So that means they've paid 2 months worth of excess rent over and above the financial than what was due in the financial year. So this is going to be income received in advance. And then it says, note that the monthly amount was reduced by 1,350, and this was with effect from 1st January 2022. So let's just look at the rent figure from the trial balance. So we see we've got 183,600. And we have 14 months of this. So we need to divide this figure by 14. But remember, this installments is not really a level installment. So if I divide by 14, that's not really going to give me the correct answer. So they say that the rent was reduced by 1,350. So I have 10 months worth of one rental amount, and then I have another. So I have 10 months of one rental amount, and then I have another 4 months where this rental amount was reduced by 1,350. So in order to get back to my level amounts, I need to add back the 1,350. So that's 4 times 1,350. And then if you put that on your calculator, you should get 13,500. But remember, this 13,500 was the rental figure before the reduction. So I need to subtract out the 1,350 that it was reduced by. And that will give me 12,150. And then I've had 2 months of this rent that was paid in advance. So I need to subtract from my rent income 2 times 12,150. And that will give me a figure of 159,300. Now, there is another approach of doing this, and that is to use an equation, but it does amount to the same thing. And basically what you're going to say is 183,600 is equal to 10x, which was the original figure, plus 4x minus 4 times 1,350. Yeah, so this equation is quite logical. So saying that I've got 10 months of rent, and that's 10x, but then I've got another 4 months of rent, which is 4x, but then that 4 months of rent was reduced by 1,350 for those 4 months. And then if you end up solving this equation, you do get back to the 12,150. But I guess if you follow the logic in the first method that I used, it is a bit quicker. But like I always say to students, you should do what you understand and what you are comfortable with. And with more complicated problems, it does make sense to set up an equation. So if that works for you, then by all means, do go with this method. Okay, so then we come to our last income statements adjustments, and thereafter we can round up our income statements. So they say that income tax for the year is calculated at 30% of net profit, and the net profit for the year after tax, after adjustments, is 356,300. and they have entered that figure here. So we need to just like use a bit of ratios and proportions here and work back what our tax figure was. So the way I like to do this is we say that 356,300 is equal to 70%. So that's because that's our net profit after tax. Then our net profit, let our income tax figure equal to X, and that was obviously 30%. And then if we of our total profit before the tax, and then if we solve this, we get that X is equals to 152,700. And that's our income tax figure. And then let's just add that in. Now, to get back to your net profit before tax, what you could either use this method again, and then obviously your net profit before tax is 100%, and then solve that, and you will get the figure. But then since we've got our income tax and our net profit after tax, if we just add these two figures together, we do get to the figure we need, and that is 509,000. Okay, and then yeah, we just need to work back from this figure. So my net profit before tax is 509,000. Then I need to add back my interest expense to get back my profit before interest expense. And then so I just need to add this figure and this figure. And then I get 651,250. Then they have actually given us the operating profit here, but they've not given us the interest income, and they've made no mention of it anywhere in this information. And if you look, the interest on fixed deposits is a question mark, and the actual fixed deposits is also a question mark. So we don't have any information on this. But yeah, since we've got our operating profits, we can just work backwards, and our interest income is going to be the difference between this figure and that figure, which is 76,250. So let's just tie up some other parts of our income statement. So if we add all our other income together, we'll get an amount of 200,000. And then let's add our figures from the calculations that we did above. So our trading stock deficit is 47,515 that we calculated. Our total depreciation for the year is 357,900. And our loss on the sale of assets is 4,500. Now, if you look at sundry expenses, and I did mention this earlier, they haven't given us this figure, but then we have all other figures in the income statement, so we can use that as a balancing item. So yeah, but firstly, let's just compute our gross operating income, and then that's just adding your gross profits and your other income, and then that'll give you a figure of 3,890,000. And then if you work backwards here, you'll see that our operating expenses actually equals to 3,315,000. And then I have all the items except for the sundry expenses. So I just need to use that as a balancing item, and I need to subtract all my other expenses from this operating expenses figure that I got, and you should get that your sundry expenses works out to 239,855. Okay, and that's our income statement done. Wasn't too difficult. But then we still have the equity and liability section of the statement of financial position to do. Okay, so let's get to the loan part of the question. So this is with regards to the loan from Saturn Bank. So they say all transactions with respect to the loan were recorded. Interest of 142,250 on the loan is capitalized, and a fixed monthly installment was paid in full. And then they also say that the capital portion of the repayments will increase by 10% over the next financial year. So using the information provided, we need to work out the capital portion of the loan that was paid this year. Okay, so this often confuses students, but the word capitalized means that the interest is added onto the loan. So if interest is not capitalized, it's just subtracted from your cash and cash equivalents. But if it is capitalized, then it is added onto the loan. And an example of this is, suppose I had a loan of R1,000,000 and there was the interest of 100,000 on it, and that interest was capitalized. Then my new loan balance will be 1,100,000. So I think it's quite good to understand the flow of the loan and how this works exactly. So my closing balance of my loan will equal to my opening balance plus my interest, which is capitalized, and then we will have to subtract any payments that are made onto this loan, so minus my installments. So we can use this to work out what the installments we made were. So my closing balance of 1,159,000 is equal to my opening balance of 1,280,750 plus my interest of 142,250 minus my installments. And then if you solve for x in this equation, you'll get 264,000. But then remember, this 264,000 is including the interest paid. So in order to get my current portion, I'll need to subtract out the interest. So it's up minus 144,250. And then that will give me 121,750. But remember, they did say that this 121,750 will increase by 10% next year. So it's times 1,1. And then so this will give me the current portion of my loan, which is 133,925. Okay, so then they give us some information on shares and dividends. So they say on 28th Feb 2022, so that's the end of our financial year, there was 1,150,000 shares in issue, and then a final dividend was declared on the last day of the financial year, and then the total dividends for the year amounted to 345,000. So the total dividends for the year amounted to 345,000. Let's look if there were any interim payments. Yeah, so we do have an interim payment of 207,000. So in total, 345,000 was declared, and we only paid 207,000. So the difference between these is what's unpaid, and that is your shareholders for dividends. So it's 345,000 minus 207,000, which is 138,000 for shareholders for dividends. Okay, then they tell us the net asset value per share after taking into account all adjustments is 675 cents per share. Now remember your NAV per share is equal to your owner's equity over your number of shares. So using that, we can actually work out the total owner's equity. So using this formula, so it will be the number of shares, which is this figure here, 1,150,000, and then times my NAV, which is 0.75, and that should give us which is actually 675 because it's 675 cents, and then that should give us an owner's equity of 7,762,500. Now remember, they've given us this ordinary share capital, and my owner's equity is only consists of two items, which is my ordinary share capital and my retained income. So we can just use this retained income as my balancing figure. And if you do so, you get a retained income of 1,092,500. Okay, and then I think we just need to complete out the balance of this note. So firstly, my mortgage loan, I had a balance of 1,159,000. I need to subtract out the current portion of the loan, which we calculated earlier, and that's minus 133,925. And then that will give me a non-current portion of loan as 1,025,075. And then remember, with my trade and other payables, I did have that rent adjustment that I made to my rent amount in my income statement. And since that's income received in advance, it needs to be under trade and other payables. So I need to add 24,300 here. And then that gives me a total figure of 452,300. Okay, and then the last item here I need to look at is my SARS income tax. So if you look in the trial balance, we did provisional tax payments of 130,000, but if you look in my income statement, the income tax for the year was 152,700. So I owe SARS 152,700, but I've done provisional payments of 130,000. So the difference for that will be my SARS income tax liability, which is 152,700 minus 130,000, and then that will give me a figure of 22,700. And then the last step is I just need to total my shareholders' equity and my liabilities, and that should give me a figure of 9,534,500. Okay, I hope this was quite a good question to do, really good practice, and mostly from what I've seen, you can expect something similar in the final exam that you will be writing. Though I would practice as many past papers as possible. Remember, the key in accounting is practice, practice, practice. I really hope you found this video helpful. Please make sure to like, subscribe, and comment, and stay tuned to Excel Academy for more accounting videos coming up.